There's two major drivers truly draining wealth out of the Black community, and honestly, any community that's not in the upper 1%. It's going to be taxes and inflation. In this live stream, we're going to be discussing how Bitcoin could be one of the potential solutions to stopping the stem of that tide or that drainage from the Black community when it comes to wealth. So, how does Bitcoin solve this problem? Is what we're going to get into in this live stream. Previous live stream we covered was talking about gold and its place in the wealth transfer. And there was a mixed reviews in the comment section in the chat, discussing what, gold being a wonderful alternative and some saying gold is trash. So now we're going to be talking about Bitcoin. We're going to be talking a little bit about pros and cons of Bitcoin. We're going to be talking most importantly, the role that this asset can play in helping to not only retain, but build real wealth in the system as it transitions, which it is doing right before our eyes right now. So, as I mentioned earlier on, the two major key drivers to draining wealth out of the Black community is taxes and inflation. And this comes from a really deep-rooted history. I don't think I need to go into too much into the weeds on it. But right now, I want to talk about it from the psychology that leads to it being so effective. Part of the problem for Black America, because of the history we have in this country, is that we don't really trust the financial system, and we also have a poor education around the financial system, which both are reasonably fair. That having been said, in a more modernized world where things are a bit more balanced and democratized, et cetera, where we have relatively, full-scale access to the financial system and the economy, we have a lot of old habits and mindsets that we haven't altered or adjusted, at least at scale. Some of us individually are doing well, but at scale, most of us still have some really poor financial habits that are making taxes and inflation very effective drivers to draining wealth out of our pockets. So one of the factors that's going to make that work is the fact that we are terrified of credit. Another factor that's going to make that work is that we believe saving money is a wealth building habit. The next thing is going to be the financial advice that we like to take. And most of it involves us steering clear of investing, of taking certain levels of risk. So these things mix together to make taxes and inflation a very effective vehicle to draining wealth. And that's for anybody. I'm focused on Black America in this video because that's the base of my audience, and I happen to be a Black man. But for those of you who are new, because there's always somebody new catching the content, before I get too far in the weeds, important for you to understand, I am not filming this live stream as an expert on Bitcoin per se. I'm an expert in the finance space, in the banking space, in the lending space, and I understand economics relatively well, capitalism relatively well. And that's leading me to talk about Bitcoin with confidence. It's not because I'm a Bitcoin expert. So don't take this live stream as you're about to get a masterclass on Bitcoin, because you're not. What you're about to get a masterclass on is how Bitcoin can fit into your financial picture in a way that will help you to mitigate the two true enemies of wealth, taxes and inflation. That's what you're about to get an understanding on in this live stream. Those of you coming into the live stream, leave a like and let me know you're in the building. I see a handful of y'all starting to come in. I appreciate y'all taking the time out to educate yourself or join a really important discussion. So the mix I just gave you of behaviors of psychology, believing wealth is saving money is a wealth generating habit, believing avoiding debt or being debt adverse is a good habit, and being risk averse is a good habit. These three things alone will absolutely ensure that taxes and inflation chew you alive. And I'm going to give you a breakdown as to why. And I want to make sure that you have a good understanding of this from a daily function perspective. Okay, I don't want to get excessively high level, but to some degree I may have to. But when it comes to taxes and inflation, they are the mechanisms that drives wealth upward. They drive wealth upward. What that basically means is the majority of us that are in the working class, working poor, middle class, most of us are exchanging our time for labor, we're exchanging our labor and our time for money. And that is the least advantageous way to navigate taxes. On the inflation side of the spectrum, most of us do hold most of our assets in cash, whatever that we have, because most of us that are middle class on down don't have a lot of assets. But those of us that do have them, we tend to be cash heavy, meaning that we believe that saving cash is a healthy function and a wealth building habit. So we don't own enough assets to put it in another context, and we exchange, for money, we exchange labor and time. The tax code penalizes that the most. So you have those dynamics leading to taxes and inflation ripping our money out of our pockets, our wealth out of our pockets, because we're on the wrong side of taxes and inflation. Taxes or nor inflation are necessarily inherently bad in themselves. It's what side of the spectrum are you on? So that's very important to, put in a context. You can be on the right side of taxes and inflation, and that's what we're going to cover briefly in this live stream. You can be on the right side of the spectrum. P&R Connected, my guy, always good to have you in the building. I'm bad at the game. Shout out to you coming into the building, being so assertive, saying hi, demanding a hi, but hello. So y'all make sure y'all leave a like as y'all come in the building. So just to put perspective on it, think about it this way. You have an entire tax code that is designed to incentivize certain participation or function in the economic system. It is incentivizing you to invest in certain things. It is incentivizing you to, to earn money certain ways, to spend money certain ways. Inflation, on the flip side, on the other side of the spectrum, is something that drains or destroys or is a byproduct of the destruction of a currency, basically. And so what that basically means, as a currency becomes less valuable, glad to have you in the building. Make sure y'all leave a like as y'all coming in. Appreciate y'all letting me know y'all coming in on the chat. So with inflation, the currency is losing value. And in the process of doing so, inflation is a byproduct. But inflation is not a total negative. What it means is the currency doesn't go as far as it used to, but the things the currency is trying to buy are going up in the amount of dollars it takes to buy it, AKA they're going up in price. Okay, so going back to the habits that are prominent in most of working class and middle class America, but especially in the Black community, we're risk adverse. We don't invest and don't own assets or start our successful businesses that will go up in value naturally with inflation. We save money in cash, thinking that is a smart habit beyond a certain point. Maybe an emergency fund is cute and cool, but after that, cash is pretty much garbage. Give or take a couple of scenarios here and there. So you're losing purchasing power because you're saving in something that is inherently compounding a loss over time. And then on the flip side of that, you're debt adverse, which is one of the top tools that leads to an advantageous tax planning strategy. Debt is usually a huge part of that, which is why real estate is the single greatest asset class when it comes to taxes. That's a different conversation. But leverage debt is a part of that strategy. So that having been said, hopefully this context covers that part really well for you so far. Let me know in the chat down below if you have any questions or need me to catch you up on something. Or if you're watching the replay, let me know in the comment section. I'm very responsive. So that having been said, taxes and inflation, it's not your budget. It's not saving enough money. It's not, I paid my debt off. All of that is bullshit after a certain point in time. After a certain layer, I can't fully pronounce your name, Johanny, but shout out to you for coming into the building. Make sure you leave a like. So none of those things I just named, the budget, avoiding debt, saving a bunch of cash, none of that is going to truly help you stem the tide of the wealth transfer or avoid being on the wrong side of the wealth transfer. They're cool to an extent. Understanding where your money is going in and out and budgeting is a good foundational tool. Having a certain amount of cash on standby, a healthy tool. But neither of them in themselves are going to lead to building wealth. Being risk averse or in debt averse, which is really risk again, is a bad habit as well, because the system forces you to take risk in order to win. You cannot sit prudently on the sideline, holding on to your cash, paying your taxes, donating to charities, and think you're going to wake up a billionaire one morning. It's not going to happen. What you're going to do is make it easier for somebody else who's leveraging against you to become a billionaire. You're going to be the cattle. Somebody else is going to be the slaughterhouse. Somebody else is going to be the one slaughtering the meat. So it's important for you to understand taxes and inflation are the key mechanisms that drives wealth from the working class, the middle class, the poor, up to the wealthy. And the main reasons behind that is because the middle class, the poor, the working class don't take enough risk. They don't invest enough. They save too much in cash, rely and depend too much on cash, and they're scared of debt. You're scared of effective use of debt. Now, hopefully that makes sense. Let's transition to over how taxes and inflation are the key drivers to draining wealth out of the community. And let's talk a little bit about why Bitcoin is one of the greater assets to consider in the transition, in the wealth transition that we're in. A lot of you have heard some of the monikers of Bitcoin, the highlight reels, right? You know, the fact that it's capped at around 21 million coins, you know, it's decentralized, you know, transparency, it's transactional value, the ability to transact faster, more efficient with better efficiency and better transparency. All of these things are really valuable, right? These are going to be some of the reasons why Bitcoin is going to be a great vehicle when inflation continues to get out of control. The reason for that is because when people are looking to, inflation is going to cause a lack of confidence in the financial system and in the currency. Does that make sense so far? Basically to say, I have enough common sense to know that my dollar that I'm holding is only losing value the longer I hold it. So the number one thing it forces me to do is to get rid of the dollar, right? So that's why we're talking about investing and moving that money into stuff that's productive. That's where the tax part also comes in, because if you do that effectively, you get tax breaks, tax incentives, you end up not paying much or any taxes. Different thing. But inflation is going to be the mechanism that makes most people, most entities, institutions, and even countries lose faith in a currency. Okay, great. Well, if I'm losing faith in it and I want to get it out of my hands as soon as possible, then that means I need to get, and I need to get into something else that I can feel confidence in, that's going to be stable, that will continue to hold purchasing power, that will continue to keep, confidence and faith in the system. That's partly where gold comes in. For those of who have been critical of gold, gold still fits that bill handsomely. But Bitcoin is coming along and doing similar in its own way. Not because it has the same feature sets as gold. It does to an extent. It has the finite capability, potentially even more finite than gold, because gold can technically potentially be found or mined, or an asteroid can land with more gold on it. But Bitcoin is coded to be capped at around 21 million coins. So that's one capacity of it. Transactional value is important, because if it's going to replace or give me an alternative to a currency, gold is a hell of a lot harder to use for transactions in real life. But Bitcoin, being a digital form of gold, as some call it, allows me to still transact like a normal human being, faster, with transparency, and decentralized. I don't have to go through banks and governments and all these other systems to spend money or to receive money. Does that make sense? So Bitcoin does solve that problem, or at least shows the potential to solve that problem. So that means just those alone tells you that a lot of money is going to see the value in just those traits alone and say, look, let's get out of the currency that's falling apart and get into something that can continue to transact, hold some confidence and faith, and still allow us to maintain purchasing power or increase the purchasing power. That's where Bitcoin starts to come into the conversation. So from the tax perspective of it, the IRS sees Bitcoin as property, not currency. So majority of your activity with Bitcoin could be taxable, technically speaking. The regulators and the IRS are still getting their hands around Bitcoin. So we haven't really seen what that's going to look like yet in its full evolution. But that having been said, at the time of this live stream, you're able to transact in Bitcoin and, maybe incur some taxes here and there, etc. But generally speaking, you're able to transact at a low tax barrier and profit from it in a low tax barrier, right? Over time, that's probably going to change. But what's likely to happen as the mainstream system adopts Bitcoin and wants more people to engage in Bitcoin, it's going to make it more tax favorable over time. That's usually how that works. The government, wants people to own and invest and interact with real estate. So they make it attractive for you to do so. To some degree, that applies to the stock market. The same thing applies to borrowing debt responsibly and for effective reasons. These different things that do have, start a business, run a business, have expenses in a business. The government wants that. It creates economic activity. So it incentivizes that by giving you an alleviation on taxes. Does that all make sense so far? Somebody down in the chat, let me know. I appreciate y'all being locked in and paying attention. but let me know if this is making sense to you so far. So there's no massive inherent value to Bitcoin when it comes to the tax aspect yet, other than the fact that you can probably get around some taxes, transacting and interacting in Bitcoin. But in the future, as a financial professional, I'm telling you, the likelihood is that as the government and other institutions work with Bitcoin closely and want more people to adopt it, they're going to probably make it more attractive from a tax perspective. So we don't have anything conclusive. That's anecdotal. But at the end of the day, there's a lot of encouragement around the idea that there will be tax benefits to Bitcoin, okay, and tax strategy to Bitcoin. There's some already, but there's likely going to be more. All right, that aside, we see some of the fundamentals for inflation. We see some of the fundamentals on the horizon for taxes. The reason I say that this could be advantageous, particularly for the working class, the middle class, the Black community, Bitcoin, believe it or not, is arguably the most accessible investment, give or take the stock market, that has the most upside potential. What that basically means is all signs, Bitcoin has breached $100,000 right before our eyes in the last few years or so. And maybe about 5 or 6 years back, it would have been kind of insane to throw those numbers out, which some people did. But for the mainstream that kind of had their eyes on Bitcoin, mid to late 2010s, you would be really astonished at the idea of Bitcoin going over $100,000 in dollar, value. It's breached 100,000, 130,000. It's kind of come back down at the time of this live stream, but it breached that number relatively easily when we experienced relatively rough inflation and asset inflation. There's a lot to come when it comes to inflation. There's a lot to come with asset inflation. The Federal Reserve is already trending to cut interest rates, which is a huge driver. And the economic system is trending in a way where inflation is something that is going to naturally turn to in order to try to solve its problems. One of the examples of that is the government debt. One of the most realistic ways to try to handle the government debt or make it manageable is to have more inflation. I don't want to get into weeds on that for those of you who may not be as familiar, but I'm just letting you know that the government, the private sector, corporations, rich people, they all want inflation on some level, including the central bank. The central bank never tells you they want to eliminate inflation. They tell you they want to manage it. Big difference. The lack of faith in the US government and its decision-making and its debt and the US dollar is all going to funnel a lot of attention to Bitcoin. It's going to funnel a lot of attention to Bitcoin and relatively similar cryptocurrencies and stable coin, all these other alternatives, maybe not stable coins in that way, but cryptocurrencies, Bitcoin being the premium version, the one that everybody's familiar with and has the most faith in, is going to get a lot of attention because the faith in the US government, the faith in the US government debt, the faith in the US dollar are all waning. They're all waning. And it doesn't mean other currencies and governments are more trustworthy. I know people keep throwing China in the mix as this alternative. Trust me, people are not over, countries and institutions are not overly comfortable and enthused to jump in the bed with China. So what it means is the most reliable thief in the den of thieves, if you will, or the most reliable crook in the den of crooks, the United States, is losing its appeal as a stable, safe, reliable place to harbor wealth and to transact in its currency and to lend debt to. So if that's the case, it doesn't make everybody else necessarily more attractive because there's not other countries necessarily doing it better than us per se. What it does mean is that people are going to look for alternative assets that are tested, proven as a safe place to put their money because value never disappears. Wealth never disappears. It transfers. It moves. It's in the currency right now. The currency is no more reliable. It's in gold. It's in gold. Gold is not useful anymore. It's in digital currency. Okay, all of that's been taken care of. It's in the stock market. It's in real estate. It just moves around. It never disappears. There's real wealth still pent up in the US economy and the global economy. People are still transacting. That's not changing. So all of that wealth and value has to still go somewhere measurable. It has to still go somewhere. Real assets. Now falling into that category is Bitcoin. So as these things continue to get worse, the political stuff, the debt crisis, the currency crisis, as all of this starts to get worse, A lot of central banks and countries are stocking up on gold and silver. For anybody sitting in the backfield thinking gold and silver are obsolete, you're a goddamn fool. You're a goddamn fool. But Bitcoin is very viable. And that's somebody who was apprehensive about Bitcoin just a handful of years ago themselves. But as a financial professional who understands how money works, I see it. I can see it. And that having been said, it goes back to my point a second ago that Bitcoin could be the lowest barrier of entry with the highest upside. What that basically means is it's not that hard to directly invest in Bitcoin or invest in Bitcoin by proxy, like, you know, the stock market, for instance, which is a really decent option, and ride a very high wave up, because now the conversation is 250 on Bitcoin, $500,000 in dollar value on Bitcoin. Some are throwing out $1 million. And it's hard to look at it and say it's impossible, because at the end of the day, we said 100,000 was egregious and unreasonable. So 250, 500,000, $1 million. Can you imagine getting in on Bitcoin at 70, 80, 90, $100,000? And it does go up to 500,000. It does go up to $1 million in dollar value. That's not a pretty economy, by the way. That's not a pretty world to live in, because if Bitcoin's doing that, then that likely means the US dollar, the US debt situation, something's going really bad. The economy, inflation, something's probably really bad. But you have a lot of institutional money pouring in. You have governments finding a way to get their hands on it. Look what Trump's doing with Bitcoin. It's important for us to assess all options. And Bitcoin can be bought directly. It's becoming, you know, financialized in a way where, you know, there's ways to get into it now that aren't that complicated. I personally don't fully understand buying Bitcoin directly and storing it and all this other stuff and mining it. I don't get the mechanics all the way. I'm telling you that up front. But I get its use case a lot better because of my professional background. So that having been said, for me, the most comfortable way at the moment, possibly owning Bitcoin directly, because that's going to be probably the most upside and the lowest fees and the lowest third-party counter risk, if you will. But the stock market is the next best place to get into, that most of us that are already investing understand really well how to function in the stock market. Find what's called pure plays, meaning direct companies owning, holding, or mining Bitcoin, or ETFs that are directly connected to the price of Bitcoin. Either one is a reasonable alternative. The direct plays or pure plays are probably going to have the most upside, but the ETFs will probably do well if Bitcoin goes up 3x, 5x, 10x in the next handful of years. My point to the Black community and anybody who's in a financial situation of the middle class, working class, etc., which is 80, 90% of us, we have to consider this channel has been all about banking and mastering the banking system, proper effective use of leverage or debt to acquire assets, start, grow, and launch businesses, buy real estate, get in the stock market. This channel has been all about that. I am not converting to a crypto channel. What I'm doing is giving you the full view perspective of the way that I curate information to you by covering everything that's a viable option in order to protect yourself as wealth is being transferred at lightning speed right now. Bitcoin is something we have to consider. My recommendation is viewing directly buying if you have enough acumen to understand that. The next option is the stock market. The next best option is to get into companies directly involved in mining, owning, holding, storing Bitcoin, or ETFs that are directly pegged to the price of Bitcoin, because Bitcoin will continue to be a viable option. Thank you, PNR Connected. Stand in the pocket with me. This is going to continue to be a viable option, because at the end of the day, a lot of value, a lot of wealth is going to come out of currencies. The dollar ain't going to be shit. All these other currencies ain't going to be no better. And for a period of time, as well as mainstream adoption of Bitcoin, it has continued functionality. That's where it separates from gold. And I'm going to be doing a whole nother live stream about that next, comparing the two. But Bitcoin has long-term viability as a use case. It may not be a currency replacement, but transacting in it, you know, products popping up around it, it's already being, I already covered how it's being used as a collateral for lending transactions by banks, slowly but surely. JP Morgan announced not long ago, it's allowing institutional big investors to use its holdings of Bitcoins as collateral to borrow money. That's a sign of adoption, people. Trump is literally trying to get the US government to hold it firsthand. They're already using confiscated Bitcoin, by the way. it's going to get adopted at a high level. When all of that value plows into it, just like gold and silver, it's finite. So at 21 million and some change is getting all this currency, all this, well, money coming out of currency or value coming out of currency, plowed into it. When that happens, the price naturally is going to go up. The valuation in dollar terms will go up, meaning that you're going to be able to say, well, my $100 bill, you know, in a year is only going to be able to buy me $96 worth of stuff, $93 worth of stuff. But if I take that 100 and buy $100 in value in Bitcoin in some form or fashion, now I can get that same $100 in value. Maybe for a period of time, I'll get more than $100 in value. People do a great analogy of comparing dollar purchasing towards buying a house versus Bitcoin. Basically meaning that, you know, the median housing price just 6, 7, 8 years ago was $200,000, under 300,000. Just in a handful of years, it's up near $500,000, up mid fours, $500,000 in dollar terms. But if you look at that same window of time of 2015 to now, for instance, it takes less Bitcoin to buy the same house. Same thing can be said about gold. It takes less Bitcoin to buy the same house. What that basically means is it's holding its value or growing in value compared to other very valuable physical assets. That's what you want, because the wealth transition works that way. You come out of the currency, the faith in the system wanes. You come out of the currency that system runs off of into other valuable assets that will now have a high valuation for a period of time. When everything stabilizes back out, you come out of that asset in a timely fashion and get back into the assets that the stocks, the real estate, etc. You get back settled into the new system when it gets launched. That's basically in a nutshell. So for Black America, who's already at the bottom of the food chain economically, those of you paying attention that fit the bill that may not be Black, but you're in the same financial situation as Black America, meaning you don't have a lot of assets, you don't have a lot of wealth, you're not silver spoon, you didn't get a bunch of money and wealth passed down to you. That means you have to take your wealth into your own hands. And in order for you to take your wealth into your own hands, you need to understand how wealth works. You need to know where to put money. You need to know where money's going. You need to know how to position yourself to be on the right side of inflation, the right side of taxes. Because at the end of the day, those are the two greatest conductors of wealth transfer. Literally those two, nothing else. The cute budget, stay away from debt, all this other BS is dumb. After a certain threshold, it's no longer valuable. Oh, I have $200,000 in cash in the bank. You're a fucking idiot. God bless your soul. Oh, I don't have any debt. You're a fucking idiot. God bless your soul. At the end of the day, inflation and taxes, that's where you need to focus if you're looking to master this financial system, a capitalistic financial system at that. Inflation and taxes, being on the right side of inflation and taxes. One of the greatest assets that's peeking his head out as a place to be for that is Bitcoin. Get in directly on Bitcoin, get into the stock market with Bitcoin. Find a way to ride that elevator up. And then at some point, you walk off the elevator into other assets that are familiar again. Land, real estate, maybe the stock market in other ways again, etc. But at the end of the day, shout out to y'all with the emojis. At the end of the day, I'm just being honest though. At the end of the day, Bitcoin is a viable asset because at the end of the day, it's going to navigate all of the lack of faith out of currencies, out of the dollar, out of the yen, out of all the yuan, all this other stuff into real assets, gold, silver, land, energy resources, Bitcoin. These are going to be real assets, valuable companies that have real promise. These are going to be the real assets. It's the same game. It's the same game. But it's important for us to understand that if we don't figure this out and make the appropriate move soon enough, you're going to look up and silently and quietly, you're going to look up and be completely raped out of everything, pillaged. Literally. Like you're literally going to go into it with like multiple layers of clothes, 2 wallets on you, a nice chain. And when it's all said and done and this wealth transfer is done, they're going to be then left you out of everything. If you're lucky, you might still be in your socks. Because what's going to happen is all the real value is going to come out of the currency that your dumb ass is still sitting there holding. And the smart people and the well-positioned people are going to be sitting in all of the assets. like Bitcoin. It is not too late to get into Bitcoin from what I can see. I'm not an expert at Bitcoin, but I am an expert when it comes to the finance system, the lending system, banking system, and I have a very good acumen for economics. Bitcoin has a lot of runway left. If you can't afford to get into it directly, get into the stocks behind it, because companies are going to get on top of it. They see it. So I'm encouraging you, and I'm going to do my next live stream. Most likely the next one is going to be Bitcoin and gold versus and in complementary to each other, or in comparison to each other, in conjunction with each other, because they're not either or. They're not either or, but it is important to understand the two of them and the place that they have in your financial plan. That's going to be the next live stream, so I'm giving y'all a heads up to stay tuned for that. But I want to wrap this one up with any questions y'all have down below. Let me know any feedback, anything you have around this, because this is an essential topic. If Black America and the rest of us that are at the bottom of the barrel don't get on board with this transition, I don't know if there's going to be another shot to do it in our lifetime. I'm just being honest. If we don't get on it now, I don't know if the opportunity to figure out the next great opportunity is going to come around again. So if you don't want to get raped, pillaged, plundered, I recommend you take whatever assets you have. If it's $100 a month, whatever it is, find you a direct way to get into Bitcoin, gold, silver, whatever. Get into Bitcoin in the stock market if you don't feel comfortable with real estate. And I'm gonna close out with this last thing. Why am I emphasizing the stock market, even though the upside potential might not be as much and there's more third-party counter risk? The stock market can still be a very attractive option, because at the end of the day, you building up a strong nest egg behind companies that are directly engaged with Bitcoin and low-key relying on Bitcoin to continue to flourish, you're still going to have a tremendous upside. You're not going to see the 5, 10, 15% returns. You will see companies do 50, 75, 100, 150, 200% in valuations over time, because Bitcoin might 5, 7, or 10x over time. And those companies are the ones directly holding it, mining it, or behind it. So when you build up that portfolio that you might have started out with $1,000 or $5,000 or $10,000 in, it can go up to 20, 30, 50, 100,000, 150,000, 250,000. You do the math. And it's in stocks in a way now you have an actual asset that you can leverage against the financial system. So you can go get you a line of credit off that stock portfolio. Y'all done heard, those of you who are familiar that already heard me talk about this. You've heard me talk about leveraging the assets once you get them. Rich people don't sell their assets, not the real ones. They leverage against them. They hold them forever, because they know at the end of the day, these transfers in the financial system lead back to the same assets over and over. Viable businesses, resources, energy resources, land and real estate, and stuff like gold and silver. And in today's world, Bitcoin. So building in the stock market is a great option. It's easier to understand, and possibly for those of us that are less familiar with Bitcoin, buying it directly, more trustworthy, because you ain't got to worry about getting your damn wallet hacked virtually or stolen or whatever. And then your transparency works against you, because you watch somebody take your damn Bitcoin hopping all across the globe. The stock market is a way to get in and still see great upside and grow a portfolio that you can easily trade out of over time, still very liquid. And you can leverage against to get access to cash, to live your life, to get into other assets, to do whatever it is you want to do. Hopefully that makes sense. P&R Connected, you're absolutely correct. We are still very far behind. Doing my part on this channel to close that gap as much as possible. So shout out to every single one of y'all dedicated, tuning into everything I'm dropping that's helping to move the needle forward, translating quality information to y'all so y'all can make better financial moves. Master your relationship banking and maximize your borrowing capacity. Get your hands on more assets, increase your net worth, so you can increase your quality of life. I don't see any more questions coming in on the chat, so I'm gonna wrap this up so I can move on with my Sunday. And I appreciate y'all taking time on y'all Sunday to tune in. All my pioneers, welcome back. To my new viewers, welcome in. If you want to lock in with me on Instagram, the links will be down in the description down below. PNR, I appreciate you, my guy. Everybody else that tuned in, liked and commented and emojis, I appreciate y'all. Like, comment, share, subscribe, support the channel so the channel can continue to support you. Go back and like the replay, y'all. YouTube does not recognize this as far as watch hours and all of that until after this video airs. So go back and take a second in a minute when I close this out, and go back and like the replay. Leave a comment on the replay to support it. Share this to support it. Other than that, I want each and every one of y'all to stay focused. Stay in motion. I'll see y'all soon.